What's up, guys? Welcome back. George Morales coming at you. Hope you guys are doing well. In this video, we're going to talk about credit scores and how to increase your credit score fast. As many of you guys know, I've been in the lending space for about 9 years, and early on in my career as a loan officer in the mortgage business, and actually even before the mortgage business, when I was doing business loans, I realized how important having a credit score can be in allowing you to go ahead and qualify for certain things. But I think before, so we'll get into that and how to increase your score. But I think before we talk about that, I think it's important for us to know how our credit scores are determined and what they're made up of. And so there's many influencing factors, but the ones that I'll go ahead and share right away is 1 is going to be credit history. 2 is going to be your credit limits. 3 is going to be your credit utilization. 4 is going to be your age of credit and how seasoned it is. And 5 is going to be the type of accounts and the number of accounts that you have. And so with the first one, with payment history, creditors want to see that you can pay people back, essentially, right? And they want to see that you can pay them back when you say you're going to pay them back, aka on time. If your payment is due on the 1st of the month, if it's due on the 15th of the month, they want to see that payment kicks in, right? Credit limits. Creditors want to see how much debt other creditors have trusted you with, right? So the higher the limits you have, the more trust people have in you. And really, this is what I think a credit score is. I think of a credit score as a trust score. How much trust do other people have in being able to lend you money and being confident in that they're going to be able to go ahead and get paid back, right? Credit utilization, right? Creditors want to see how much debt you're using at any given time and how responsible, because that's going to show them how responsible you are, right? If they give you a limit of $1 million and you're using $1.5 million at all times, you're over leveraged, right? And so that's not a good thing. Whereas if you don't use much of it, that's a good thing because it shows you're responsible, right? Age of credit. Creditors are going to want to see how long of a track record you have of building credit or making on-time payments to others, right? And so I like to think of this one like, a player in sports. You can think of basketball, right? LeBron James. The reason why a lot of people like him is just, or maybe not like him, but respect him, is because he's been good, but he's not only been good for 1 or 2 or 3 years, which, a lot of people can do in the NBA, but can he be good for long periods of times? And he's been doing it for so long that he automatically gets that respect, right? Or that trust. So age of credit is important. And the last one, number 5, is type of and number of credit or accounts, right? And so creditors want to see that you're diversified and that certain debts are going to be considered better than others, right? A mortgage is considered, quote unquote, a good debt versus maybe a department store credit card, right? So type of credit and the number of accounts that you have is important. So we'll get started with number 1, the absolute easiest way to go and increase your credit score right away is going to be to increase your credit limit. So this is like the ultimate hack. And I think before you get added on to anyone's accounts, before you open any new accounts, literally look at how many credit cards you have. And if you have a $1,000 limit, call them and ask them to increase your limit, right? Because what that does is it's going to increase your total overall credit limits. And again, going back to credit limits, creditors want to see how much debt other creditors are trusting you with, right? So if you have a higher credit limits, but your debt stayed the same, all you did was increase that is going to help you increase your score, right? In addition to this, when you increase your credit limits, your credit utilization, which is another point that I talked about that influences your score, is automatically reduced. And even though you didn't pay anything off, you didn't charge anything new, you didn't do anything other than call your credit card company and increase your credit limits. And now it's reduced simply because the amount that you owe as a percentage of your credit limit, which is now higher, is less. So you can do this anytime, but I think a really good time, I've noticed that a really good time to go ahead and try to get a credit limit increase is when your balances are relatively high or sometimes even maxed out. So if you have a $1,000 limit and your balance right now on that is $100, great. Go ahead and ask for a credit limit, see if it gets approved. But what I've noticed some success with is if your credit card is maxed out or close to it, let's say $900 is your balance and your limit is $1,000, you can call that credit card company or go on your app and say, hey, I need an extra $500. Can you increase my credit limit, to $1,500, right? And I think the reason why there's some success around that is creditors and banks and these credit card companies, they want to make money off of, you, right? They want to make money. And how do they make money? By charging you interest on whatever balance, right? So the way they see it, especially if you have good credit payments or a good payment history, is, hey, this person has a limit of $1,000 and they're using 900 right now, and they just need a bump to $500. If we increase their limit to $1,500, they're going to spend more money. And if they spend more money, we get to charge interest on that balance, right? And so it means more money for us as a credit card company. Obviously, you'll want to pay that balance off immediately, so you don't have to pay any of that interest. But from a creditor standpoint, that's how they're thinking, and that's why that might, be a good opportunity to go ahead or a good time to go ahead and ask for a credit limit increase. The next easiest way to increase your credit score is by getting added as an authorized user to someone else's account. So this is a super cool hack that is also super easy to go ahead and do. It allows you to increase your score pretty quickly to that first one with the credit limit. I'd say it'll take a few weeks for your credit score to go ahead and reflect and increase, right? This next one, I would say the same amount of time, maybe 3 to 4 weeks for that new account to reflect on your credit report. But what this means is it's pretty much a cheat code and a way to hack the credit system. And the reason why is because essentially what's happening when you do this is you're adopting another person's credit history on that account. So let's say that person's your dad, and your dad who has a credit card with a $10,000 limit, and they only use about $1,000 a month, and he pays it off in full and on time every single month. He's on it, and he's had that credit card for 10 years, right? It's his oldest credit card, let's say. This is the type of activity that generates good credit score, right? Why? We have, credit, age of credit is good because it's 10 years plus. Payment history is good because he makes a payment every month and on time. His credit utilization is low because he only uses about $1,000, but he has a credit limit, and then his credit limit is pretty good, right? Because he has a good credit limit that's on there. So he's got a bunch of good things, good influencing factors on his credit report and this account. And so that can be reflected immediately on your credit report if you get added as an authorized user. So if he adds you as an authorized user, you get to adopt all of that good activity and ride that wave, and your credit score will immediately jump within 3 to 4 weeks. With this, you want to make sure that you do this with someone who for sure has a good track record. So just like, you can adopt that good credit history, it can also backfire, on you if you get added on as an authorized user to someone's account, and that someone has had, recently made late payments. They've got maxed out balances, like that can reflect on your credit score as well. So you want to make sure you do this with someone that you trust. Otherwise, your score could drop. The downside or the risk to something like this is that if you misuse that account and you run up the balance, that person's credit score can drop because of the higher utilization, or worse, if they miss a payment because you ran up the balance too much, right? So there has to be a level of trust with this person that you're going to have add you as an authorized user. And so the way to go ahead and do this is to, reach out to that person, and they can call their credit card company, ask them to add you as an authorized user, or they can a lot of times do it online, or I've done it via my mobile apps anytime I've added an authorized user on my accounts. If this isn't an option for you, the next action that's going to increase your credit score, and this is going to be especially beneficial if you have limited credit, meaning you might only have like 1 to 3, open accounts. What you want to do is apply for 2 to 3 credit cards all at once. And what's going to happen is you'll likely get approved for 1 or 2 or 3 if you're lucky, depending on what your current scores are. And this can feel counterintuitive, right? I talk to clients and I recommend this sometimes. They're like, wait, you mean if I take on more debt, my credit is going to increase? Like, how does that work, right? Well, you're not necessarily taking on more debt just because you open more accounts, right? You have access to more debt, but that doesn't mean that you're actually taking on more debt. It just depends on how you use it, right? So it can feel counterintuitive, but not necessarily. It's not like you are, being irresponsible and just racking up a ton of debt. Doing this essentially shows the credit system that you're being trusted by more creditors to borrow money, which is a good thing, right? Again, we talked about, your type of credit and number of credit accounts, right? It shows that, more and more people are trusting you to go ahead and use their money. So that's going to also help you increase, your credit score because of having more accounts and more diversification in your accounts, depending on what type of accounts you end up opening. The change in your credit score with this method can take 1 to 3 months to kick in, and you'll want to be super careful with this. And the reason why, and this is why people, I think, kind of question this when I ask this sometimes, is because it can be super tempting to start spending more now that you have 2 to 3 more credit cards. Let's say each one has $2,000, $3,000, $4,000 limits or what have you. If you kind of get that false sense of security, like, hey, I have more money, right? But you don't. You just have access to more money, and you go on a shopping spree, or you start, booking some travel or what have you. And if you start running up these balances or even maxing them out, this is going to have a negative effect on your credit score. You're going to see your utilization go up, and as your utilization goes up, your credit score is going to drop. And not only that, I think that's the least concerning part about it. The most concerning part about it is that you're going to start paying interest on this stuff. And again, it starts snowballing to the point where it's not a fun thing to go ahead and have. So you want to be super careful. And my rule of thumb is usually with credit cards is use them and then pay them off in full each month, pay the balance off in full so you never have to go ahead and pay interest. The next strategy that you can implement is to simply pay down your current revolving balances if you have any. This is going to reduce your credit utilization percentage. Creditors are going to want to see that you're disciplined enough to use the credit and also pay it back in a timely fashion, right? If you keep balances lingering for too long, it shows creditors that you might be having some financial challenges because you're overly reliant on borrowing money, and you're even willing to pay, high rates to do so. So just imagine, right? Just think of that logically. If you're willing to pay 18, 20, 25% on, interest on this debt to borrow money, that means you're super motivated, right? You're motivated for a reason. You might really have something going on that incentivizes you, or that encourages you, or that makes you think that it's okay to pay that high interest rate on that kind of debt, right? So, that carrying those balances for too long is never a good thing. So when you pay this down or you pay those balances off, this immediately makes a positive impact on your score. Even my credit scores, I'll see them every few weeks. I'll get the notification from Credit Karma, right? Because I use my credit cards religiously, month in, month out, and then I pay them off every month. And I see it as my balances start going up. I'll get an email from Credit Karma saying your credit score changed. And that usually has like a negative, tone to it, right? And then I'll pay my balances off, a couple weeks later, and then, hey, congrats, your credit score jumped up by this much, right? And so it ebbs and flows, but it's because of that revolving debt. Next on the list is to clean up any past due balances you might have on your credit. This doesn't necessarily mean collection accounts though. And the reason why is those accounts have already reported on your credit and are going to stay on for several years. So unless you can negotiate for a pay for delete with these creditors, I don't think that you should actually go back and pay these collections off. If you do a pay for delete, what this means is that you're paying the creditors the full balance with the agreement that they're going to remove this collection from your credit report. So before you pay any collections off, if you can negotiate a pay for delete and get something in writing, do not trust anyone just telling you that they're going to do it on the phone. Make sure you get something in writing from them saying that if you pay that balance off in full, they're going to remove this from your credit report. And if they do, then that's going to go ahead and help increase your credit score. But outside of collections, if you have any accounts that aren't yet in collections, but maybe you have a past due balance because you missed a payment and it racked up or what have you, for 30 or 60 days, getting that balance, up to speed and paid, definitely helps increase your score. And now lastly, if the steps that I mentioned previously aren't working, what this means is that you've really have some challenges with your credit, which is okay. That's why we're here and that's why we're watching that video. And so what that means though, is that where we would probably have to start is by getting what's called a secured credit card. These cards are cool because what this is it's essentially a card that some creditors are going to go and offer, where you come in with a deposit of, let's say $500, for example, and they're going to use that $500 as your credit limit. They're going to say, hey, George, yes, we'll give you a credit card, but give us a deposit of $500 and we're going to set that as your credit limit. Now you get to use the card, however, you want to use it, just like any other credit card. And the reason why this is helpful for the creditor and they're wanting to do this is because they have the deposit, right? And so because they already have your money, if you go out spending it and let's just say you max it out and decide to bail on that, balance, they already have your money, right? So they're just going to take that $500 and use that to pay off your debt and they don't lose anything, right? But if the opposite happens, which is how it's supposed to work, right? Is you're responsible with it. You have a $500 limit, you have a deposit on it. What will happen is you'll use it responsibly. You prove to them that you can make on-time payments as agreed. And then at some point they trust you enough to remove the secured label from it. So think of it like having training wheels on, right? Like if you learn how to, ride a bike, you initially start with the training wheels on. So that's what that is. There's some guardrails, right? And then after some time, as a kid, your parent trusted you to take the training wheels off and now you're on your own, right? And you can balance, riding on that bike. A secured credit card is exactly that, is you got training wheels on with that deposit. But at some point, once you prove that you can make on-time payments and are not going to max these credit cards off, and you can use a balance and pay it off, use a balance and pay it off, use a balance and pay it off, the training wheels come off, the secure label comes off. They give you your deposit back a lot of the times, and now you have a regular credit card. Once you have that regular credit card, you can go ahead and now that you've earned some trust with that creditor, apply for other regular credit cards with other creditors, because now this is going to start reflecting on your credit report. So hopefully this was helpful. As a reminder, I'm a loan officer licensed in the state of California, and I make these videos to show you guys that homeownership is still possible. And I love, 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 love working with first-time home buyers who are ready to be homeowners, but don't think that they have, enough saved to be able to go and buy a home. So if you thought this was helpful, share this with somebody who it might be beneficial for, and I'll see you guys around. Peace.